Hey, what's going on, traders? Couple things. I just got done with a session with the Forex group and some of my crypto traders that are on the coaching sessions, and we were day trading today, just going over a couple concepts I call phase one, phase two, and phase three, which I teach is a process in bottoming or topping. There's only four ways a market can really top and bottom, but in doing so, we're still kind of trading around. Dragging here a little bit, short some euro versus the pound, euro versus the dollar, but just putting together some scalping there while we were teaching. But in doing so, last night and today, when we talk about Bitcoin, it's always the same reaction, guys. That I think a lot of traders, this is obviously true in the novice community or the amateur people are new to trading. The headlines, people want to come in and trade off of CNBC. The pros don't do that. You guys can look at all the headlines around Ethereum after 1, 2, 3, 4, 5, 6, 7, 8, 9 days up. What are all the headlines yesterday about Ethereum? This Ethereum can triple. Nobody's talking about it back here at 700, even through 1,000. We were buying on these dips here. Once we got above 500, we said we could go to 1,000. We were buying and adding and reducing, but took some profit into 1,000. Then you got above 1,000. You could buy some more back. But yesterday I was saying, do not chase these highs up here. You're too extended. So guys, don't do that. We did hold the 8 yesterday. That's the intermediate term pivot. But the point is, the media and all the emotion likes to come after the move. You see the headlines after the move. People talking about how they're loading up on Ethereum literally after we're up 9 days in a row. It's a complete opposite, guys, of what we want to be doing. When you look at Bitcoin, all this fear, people want to call it FUD. I don't really like that term either, because the psychology of a good trader is uncertainty and doubt. That's not something that you ever have. You never do not have uncertainty. You have to embrace the chaos theory that every day I wake up, there's risk, and I have no idea. I have to completely embrace the fact that I have no idea what's going to happen next. There's always uncertainty. This idea that I only trade or I'm only going to take risk when I'm certain of what's going to happen, that's a completely false, couldn't be farther from the truth to a really professional, consistent trader's mindset. They're never certain of what's going to happen. If you think you're certain and you get really aggressive, those are usually going to end up being your biggest losing trades. As soon as you start thinking you're certain, you are blocking out all the other information. You get too long over your skis, aggressive, because you're so certain that the market's going to do something. And then when it doesn't, you'll fight it because you don't want to be wrong. You're so certain it's got to be true. And when it's not, you refuse to admit it. And that's usually when you get absolutely crushed. So this idea of FUD, I think we can let the amateurs talk about that, but you're not going to hear the pros talk about FUD. There's always uncertainty, and I'm always doubtful, but I don't need to know what's going to happen next, guys. So anyway, everybody's puking on this Korean news right when all the pros are buying it up. So we talked about in our live room today, there's this cycle going on the intermediate term. When we want to trade what is, we don't want to trade what we think is going to happen. We want to trade what actually is happening. And what's happening is we're still in a long-term uptrend. All right, the market's doing nothing but making higher lows. So I don't know why people are panicked down here and they're all bullish up here, but that's typical. It's the opposite of what they should be doing. We talked about taking profits in front of 20,000. That was the high. We talked about a 50% retrace. We held the bands. This is the level that needs to hold before you need to start being concerned. That's 10,000. So this is the big picture. right? Uptrend, these are the levels that matter big picture for the long-term trend. And then the intermediate term trend, you have an intermediate term downtrend that started when you broke the 8. We were making lower lows. This was a pivotal lower high right here. After our wall concept, you failed exactly at halfway. That's why we said if you bought anything well here, you got to take it off there. But this is just a typical intermediate term up and down cycles within the big picture uptrend. So if you bought down here at the bottom of the risk range, you take some off at the top of the risk range. And now this is where you should be buying. This is not where you should be panicking, reading the headlines after the move. All right. You want to be using those headlines to buy into the levels. I don't care what the news is. These are the levels that I'm a buyer. Great. Whatever the news is that gets me there, I don't care. I'm welcome to take this merchandise off of everybody's hands that's selling because they bought up here and now they're in too much pain and they're reading the headlines and they're puking. So I'm a buyer here. Anything you buy here, the risk is below 10,000. That's where the risk is. So you just play it accordingly. And then obviously, if we get back up towards 17,000 now, that's the pivot. To get the intermediate term back bullish, you got to get above this lower high right here. And then the intermediate term will be back bullish also. So long-term bullish, it's just we're in this intermediate term consolidation and you just got to trade it.